Hello everybody, this is Fabi from The Next Big Rush, and how do you manage to lose $1 billion in 2 hours? This is what just happened to Evan Spiegel, one of the co-founders of Snapchat. And believe it or not, this didn't happen in the resource sector, in the mining industry, although that could happen, you know. To have a stock that goes down by a lot in such a short period of time is something that we are probably more used to than the usual people who invest in tech stocks, for sure. You don't expect that much volatility. But then again, we're talking about Snapchat, and here is the interesting thing. Nobody really knows where Snapchat is going, and the reason why they went down so much today after hours is because they missed a little bit on just about everything. User growth, revenue, etc., etc. So, my question to you is, what can we learn from a tech stock that's completely unrelated to the mining industry? And how can we apply that in order to get better returns with our little ventures that we're putting some money in? Well, one of the things that I can take away from this is that you have to know where you are in the cycle at any one point. What do I mean by that? Let's take a seat here. What do I mean by that? Well, if you take a look at Facebook and Twitter, both of them social media companies, multi-billion companies, and are also public companies. They IPO'd in 2013, 2014, right? To have a sector run up, not so much with Twitter, but become more and more popular, to have more money thrown at it, to be the buzz sector for that many years, you would sort of expect it to start to ease off in 2017. And this is something that happens with pretty much anything. You have the stock bubble of the late 90s, early 2000s, and you can tell that from 95-ish to the end of 99, stocks did beautifully. Tech stocks did beautifully. But then they burst because they did too well. And then you had stocks that just had a .com be worth far too much money. Really, there was no business behind a lot of those public companies. Wink, wink. Happens in the mining industry as well. But when it does happen, it's usually at the end of the cycle. And so something I want to leave with you here is, don't expect the cycle of anything to last more than 5 years. It's not usual, because you have enough people invested into any one sector, and then you run out of people to sell the story to. So do realize that when you're investing in gold stocks, uranium stocks, or whatever, there will come a time when we just will run out of people to sell the story to, and then it's all gonna collapse. So just keep that in mind. I think we're still very early, not just time-wise, but also gain-wise. I know that there are a lot of us who have thankfully made really nice returns from 2016, but now the stocks have pulled back. So this is a blessing. I think we're dealing with a second chance here to get into this sector. But don't come to me in 5 years saying, hey, what's going on? These stocks aren't going up anymore. Because it's very cyclical. This is how we make money. We buy when it's low and we sell when it's high. It might not even make it to 5 years. It might be a 2-year cycle. It might be a bubble next year. So you just never know. That's it. Thank you very much for watching. If you like this video, hit like and subscribe because there's a lot more coming your way. And I better be getting home because it's not that hot. This sun, nah, doesn't fool me. Take care. Bye-bye.